Good everyone, Les here, Chief Analyst of BG Trading Australia, and I hope you are well. Today I will be analyzing four stocks that you have chosen for us. Every once in a while we post into our Facebook community an opportunity for our members of this community. We are currently holding 5,500 members. People there want to join us for a great quality discussion of stocks and buying opportunities, stocks that could rise 20 to 40% within 1 to 3 months. This is all about BG trading. Anyway, we post a opportunity for them to ask us about some specific stocks that will be trading at technically discounted price. There was a big list. Potentially we'll put together another video as well with the other stocks, but I decided to pick the most interesting ones and go through each one of them and also highlight whether they are actually trading at technically discounted prices or not. So teach you how to find whether stocks are trading or not at technically discounted price. Let's have a look. Remember, this is not a financial advice, just as from BG Trading, sharing with you how we apply BGS20 strategies together with our VIP members to chase 20 to 40% profit within 1 to 3 month time. Trades like we done with Block recently, which we locked 62% profit, even beyond our threshold range. EML, which we locked about 28% profit. Cetire Limited, 85% profit. Mesoblast, 38% profit, and this one, by the way, is a stock that we have recently entered. So is Cetire Limited, two stocks that we think there is upside or either trading very good value at the moment. But that is a chat for another video. Zip, Droneshield, Appen, and many other stocks. Great trading results right there. Obviously, we do take stop losses along the way. We have recently taken stop loss with Droneshield, which I will highlight in this video, the reasons why we took stop loss at Droneshield. Unfortunately, that's how trade goes, but we try trim as quick as we can and hold the stocks that are moving to the right way as long as we can until it reaches the target. I also wanted to let you know that we are running Christmas offer. If you've ever been considering becoming a VIP member for BG Trading and get access to all our entries, stop losses, targets, stock analysis, trading considerations, risk assessment, probability analysis, and much more, this is the time we're offering extra 50% link free of charge for 6, 12, and 24 month memberships. We are also offering free online trading courses on your 12 and 24 month membership program. Not to mention, you will be able to chat with us during trading hours. Incredibly good value, okay? Especially for those longer term plans. Now let's start with the first one, which is Insignia Financial. ASX code is IFL. Look, I'm going to go very briefly into what those companies are all about, okay? And then you can explore by yourself by taking access to this analysis. I will be putting the link into our free Facebook community, Buy, Grow, Sell Strategy for Trader. Make sure you join that community. It took us a lot of hours to put together and make some projections, because it's very easy to analyze a company based on past data, but when you really want to look into having a result towards to the future, you really got to consider what's going to happen within the next 12 months, like 6-12 months, fundamentally, and obviously understanding the macroeconomic outlook as well. But most importantly, we are doing some projections here, revenue projection, potential net profitability or net loss projection, and that's how we are going to operate into this stock analysis in order to give maximal value for you. Now, recent price action. The stock was trading around $2 for quite some time. The company has been struggling with huge costs and obviously a lot of competition as well. And this is a financial service company, by the way. And the key thing for this stock, for this company now, is that is related to a takeover offer, non-binding takeover by a company called Bain Capital. Bain Capital has offered about $4 a share to take over Insignia. And the stock price was trading below $3. In fact, was trading around $2.40 to $2.80 there. So obviously, as you can see, this rally has happened potentially in some leaked information or speculation of takeover. But the truth is, if this non-binding agreement becomes a binding agreement and the board approves at $4, so I see another 13% upside from the stock has closed on Friday, so 360. So the target here for this is based on takeover offer, $4. Now, if this takeover offer doesn't happen, then it's very likely that we will see this stock falling back around $2 level, between $2 and $3, something around there. Would I be interested in buying this particular stock? Not really, because the trading range is only 13%. Okay, and there is the risk of this non-binding takeover offer to actually not consolidate, and if they happen, then we're going to see a significant crash on the stock price. If they happen, the stock probably will be trading around this $364 range for quite some time, and there will be like what we call dead meat. So you can still take 13% profit from this particular stock. It is a struggled financial company over the last 12 months. If you look at the numbers here, the company has been struggling for years to actually consolidate a significant profit here. And then the last financial year, FY24, it came up with $180 million loss, which is a significant loss as well. So we did this projection based on guidance. So the guidance is not really to improve for FY25. In fact, there is a percentage decline here between 0.9% to 2.4% in revenue, and also they haven't specified on net loss or net profitability, potentially because we'll see another net loss year. So I'm not interested on this particular stock. Okay, if you want to buy this, again, this is not a financial advice, but if you want to buy this, buy based on a potential takeover offer consolidation by Bain Capital at $4, or even if they increase the offer, there is more upside. But at the moment, I only see upside based on this takeover offer, and I would not be interested betting or buying at 13% with a huge risk that Bain Capital walks away from this particular takeover. Okay, now let's move to the second stock, Webbit Nano. Webbit Nano, it is a speculative stock, okay, because the fundamentals of this particular company is very weak. It's the same class of brain chip, for example. Webbit Nano is an Australian technology company that develops advanced semiconductor memory solution, particularly RAM technology, and offers high performance and lower power consumption. Similar what a brain chip does, making it suitable for applications in Internet Things, devices, smartphone, robotics, autonomous vehicles, 5G communications, and artificial intelligence. You can say that Webbit Nano is within what they call artificial intelligence segment in Australia. Very few companies would be classified as there, but Webbit Nano would be a one. And with this hype on AI, then obviously we could see a potential upside for Webbit Nano stock based on hype. Let's talk about the fundamental side of Webbit Nano, and this is why this is a very speculative stock, because revenue in FY24, which by the way was the first revenue for this particular company, is $1.02 million. So it's a very lean revenue, and the net loss was $41 million. And you look at this, you see increasing of net loss year on year, obviously required by investing in technology and testing and in development, but that's a huge a loss, and this is obviously a growth speculative stock. If they make well, then they could sometime along the way become a net profitable business, but at the moment I don't see any possibility of Webbit Nano to become a net profitable in a foreseeable future. What I see is potential increase of revenue year on year. So this is still a speculative stock and going to be speculative for quite some time, in my opinion. All right. So now, would I buy Webbit Nano now? Look, based on the fundamentals, I wouldn't. But now, based on the technical formation, this is a buy. And from all those stocks, and I'm going to say this straight away now, all those stocks that we are analyzing, Webbit Nano, WBT is the one that is showing the best chart formation. A chart formation that is very compelling and gives us a lot of confidence of a further rally, at least for us to achieve 20 to 40%. The stock is also trading not at technically discounted price, but at technically fair price. You see this pink line is BGS 20 strategy key indicator SMA 250, simple moving average of 250 days. Why it is so important? Because give us an indication whether the price is overvalued in comparison to its 250 days moving average, or undervalued or at the fair price. And in this case, you can see it is trading at the fair price. The chart formation shows a incremental increase of volume right there over the last 2 weeks, especially on the rise, on the upside. And that is exactly what we want to see in order to see a further rally. Okay, and then the RSI, the relative strength index, also showing what we call a bullish convergence there. At this stage here was a bullish divergence, because the chart also became a bullish convergence, and that is a confirmation that we could see a further rally right there. And I do see 20 to 40% profit opportunity in this particular stock based on the chart formation only. Okay, so we can trade this on the chart formation. Obviously, as I enforce in every single video, if you're going to trade this particular stock, have a target, have a stop loss. If you wanted to know what is our target for Webbit Nano, if we'll be trading this particular stock or not, you have access to our entries. You might want to be looking at becoming a VIP member, and you can chat with us and have the full access to all our entries, including targets, stop losses, and projections. And this is Webbit Nano, the only buying opportunity formation for us in this analysis at moment. Okay, now we're going to be looking at Droneshield and Novonix, okay, as a potential buying opportunity in the future, but not now. And I'm going to share why it could be a buying opportunity in the future, but not now, and what are the key elements that we need to find in the chart in order to be buying. Okay, so Droneshield is like almost coming out from speculative into growth stock. That's because it has been generating revenue, increasing revenue year on year. Last financial year, FY23 was net profitable, but then became a net loss position in the first half of FY24. And then we did a projection based on all the information we had from contractors and potential projection based on the first half for the second half as well, which will be only released in February of the calendar year 2025. So to illustrate this analysis, FY23, the Droneshield has generated $55.1 million in revenue and a net profitability of $9.3 million. But then in the first half of FY24, there was a lot of costs related to research and development, and the revenue did not increase remarkably. In fact, it went down a little bit compared to FY23. So $23.3 million in the first half of FY24, and that's why the share price has started sort of falling. Okay, but we thought we would see more contracts coming along, but all the contracts that we saw, there was just small contracts like $5-10 million contract with cash receipt to be recorded in the books only in FY25. So we're not going to see FY24 improvement, at least not with the information that has been given. In fact, we might even see a decline of revenue in the second half of FY24. So if it goes in line, even if it goes $30 million, so that means the full projected revenue for FY24 will be lower than the revenue for FY23. I think mostly has been priced out already now, but it could bring further downside when Droneshield reports this second half or the full year result for FY24 in February or in March. So we have to really be careful with this particular stock. And as I said before, this is a stock that we took stop loss recently, and we bought based on the hype and potential contracts coming along the way, but it reaches our stop loss. We held a little bit more, and unfortunately we took a little bit larger loss than ideally we like to. The only reason we did that is because this is stock that we have been trading profitably all through this year, and our last trade before this stop loss was 42% profit, so we had a little bit more gap to lose. That has been breaking this support, so we sold at 80 cents, and then we're not even looking back until today, as our members has requested us to put together this analysis. So based on the projection, the fundamental projection, it doesn't look very good. Obviously still better than most of the other stocks that we have looked before, but still, it doesn't look very good. Just gotta be careful with that. So now, would I buy Droneshield now? The problem is this profitability not coming in this full year in comparison to last year profitability, which made the stock to rise as high as $2. Okay, and could be an end of 2025 story if we see the first half of FY25, which by the way only going to be reported in August of September, if we see a dramatic improvement on the first half of FY25. I don't think we're going to see that in the second half of FY24, maybe in the first half of FY25. I wouldn't be touching this stock now until the second half report of FY24 in September. After that, maybe speculate a turnaround for the first half of FY25. Hopefully that made sense. Okay, so there's downside here. So it's free fall. 60 cent is a support level. We could see a higher low, maybe Droneshield even going up back to 70 cents, but most likely based on this fundamental weakening, we could see even a downside towards 40 cents, which is a support level under this current support level. So you just gotta be careful this particular stock. Now let's have a look at Novonix NVX. Novonix is an Australian-based battery materials and technology company specializing in the development of supply of high-performance materials, equipments, and services for global lithium-ion battery industry. Okay, the last reported revenue for Novonix was only $8 million in 2023. We haven't actually received the full year for FY24 because Novonix reports as per the calendar year, not as per the financial year in Australia. It's also a US listed company, so it's listed in the US market. And the problem with Novonix is these huge losses here, which make what we call kamikaze stock. It goes up and goes down, goes up and goes down. Even putting Novonix into a what we call speculative trade stock, stocks that move by the hype. Okay, so the chart formation has showed a very promising. We even took a trade here towards this huge rally that was from like 65 cents towards 90 cents. But then the problem is the way the management came up with this latest capital raising, which is good for the company, but not very good for the shareholder because they came up with a huge discount. The question is, would they buy Novonix now? So Novonix remains a highly speculative investment or trading opportunity with both upside potential but also downside risk, especially in the short term. This capital raising has once again put Novonix in what we call downtrend. It didn't actually broke effectively from the downtrend that we have seen in Novonix for the last 18 months. If you look at the RSI, it's showing almost like a bullish divergence here. We could see Novonix trying 50 cents, which is a long-term support level. If it goes to 50 cents, I think it is an absolutely buying opportunity. At the moment, buying at 60 cents would be buying for the same price of the latest capital raising. And this is not a very positive sign when the stock goes down towards the same price of the capital raising or even below that. And that's why I'm not very confident with Novonix right now. I was before, based on the chart formation. Now I'm expecting Novonix to test 50 cents again. Now, if buying now would be an effective buy, potentially, but be aware, if you buy now, you might have your position going towards 50 cents before the next bounce, because there is a strong, very strong support right there, and give us like a technical value buying at that level and highly de-risked as well. Really where we'll be looking at buying. Okay, so that's Novonix. Another thing we did here is a projection, fundamental outlook projection for Novonix, based on the information that we have. Obviously, this is a very speculative numbers that we are putting here, okay? And then we are expecting Novonix to remain in similar cash position for by the end of second half, even because the recent capital raising was just done a month ago and only a few days from the end of the year. And the revenue for the second half pretty much in line with the first half. Operating expenses pretty much in line. net loss will be probably a decline on net loss. That is a positive thing. If that happens, then we could see a big jump on the share price. So I think Novonix will be the second buying opportunity right now in this analysis. The first one being Webbit Nano, which is highly speculative, but the chart formation looks very promising, as Webbit Nano has reported its first revenue in FY24. We might see further increase on revenue for this financial year, as we see some contracts coming along. And then for Droneshield, still very dangerous because the fundamental is not yet looking to improve until the first half of FY25. And then Novonix, yes, Novonix ideally 50 cents buying, and then potentially 20 to 40%, even more, even doubling from 50 cents, as now the company is well cashed up and will start producing in the calendar year 2025. Thank you for your time. Hopefully that was valuable for you. Let us know what you think, and I'll see you in the next video. Remember, we're running a Christmas offer. Wanna become a VIP member for BG Trading? The time is now. See you in the next video. Bye.